a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hello everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about oil and gas ETFs. These were among the top performing areas of November, so obviously there's a lot of investor interest, so I thought maybe we should take a look. Now we should remember that this was the area that was hardest hit by the pandemic, and even though they rebounded in November, they are still down significantly for the year. Now this rebound in November was thanks mainly to very encouraging vaccine news from Pfizer, Moderna, and also AstraZeneca. And then there was expectation that OPEC and its allies, they are likely to extend their production cuts when they met. They did not extend production cuts, but they agreed to increase production by 500,000 barrels, which was a relatively small increase compared to the size of the global market. And the fact that they were able to arrive at an agreement, that was seen as positive for the market. And also because investors were so bearish on this sector that the sell-off was probably overdone. So that's why the rebound was also a bit dramatic. Now, whether this pace of recovery can continue in the coming months, I don't think so, because we know that wide rollout of vaccines is still months away, and there has been a surge in COVID cases and renewed lockdowns that we have seen. So those renewed lockdowns may result in additional downward pressure on oil and gas. These areas have underperformed the broader market for the past few years, not only this year, because there has been a transition to cleaner energy, greener energy. And in fact, the Biden administration is expected to encourage a transition to cleaner energy. And some of the oil majors that have been preparing for a low carbon future, they may do better than others. And also when we have vaccines, sometimes mid of next year or something, the wide rollout of vaccines, at that time too, oil demand is not going to return to pre-pandemic levels, because some of the trends which have been accelerated by the crisis, they are going to be permanent. For example, less business travel, more working from home, etc. So if you want to bet on oil rebound using ETFs, there are two options. You can either use oil commodity ETFs that use futures. Remember, they are meant for shorter term trading only. If you want to bet on longer term rebound, you think that sell-off has been overdone and probably they'll do better next year, then you should look at oil equity ETFs that invest in companies, oil and gas companies. So we will take a look at three most popular oil ETFs. So the first one we are talking about is a commodity ETF, United States Oil Fund, ticker symbol USO. This has been very popular with investors this year. But remember, it is meant for shorter term trading only. It is very volatile. It is the large oil commodity ETF, and it holds short-term futures contracts on WTI crude, and these futures contracts have to be rolled over because they expire, and when they are rolled over, they are rollover costs, because oil market is usually in contango. So longer term futures, the futures expiring at later months, they are more expensive than futures expiring sooner. So roll costs are there. So that is why this is not meant for longer term holding, that investors should remember. And in fact, I had done a video on these oil commodity ETFs where I talked about contango and other issues in detail. That was in May. Should you play the oil rebound with ETFs. You can watch that video if you want to learn more about these commodity ETFs, oil commodity ETFs. This charges 79 basis points and has 3.7 billion in assets. You can also learn more about this ETF by going to the code page on Zacks.com, reading our research report articles, and you can go to the external homepage using the link on Zacks.com. And you can see holdings and other details. There are a lot of, these disclaimers and warnings. You should read at least some of them because this ETF had to make a lot of changes when the oil prices were very volatile. And you would recall that oil futures had gone in the negative territory earlier this year. So read more about the ETF before investing in it, and remember, it's a short-term trading tool. Looking at the holdings, you will see that it mainly holds oil futures, WTI crude futures, which are expiring in January, February, March, and the ones that expire in January, they will be rolled over. Then the ones in February will be rolled over. So those are the things you should remember with these kind of ETFs. Now, the second one I wanted to highlight is an oil equity ETF. So this invests in oil and gas companies. Energy Select Sector Spider Fund, ticker symbol XLE. It is the most popular energy ETF with almost 13 billion in assets, pretty reasonably priced at 13 basis points, and it is market cap weighted, so you will see more exposure oil energy giants. So again, you can go to the code page and the external home page, State Street web page for this ETF, and you can learn more about this ETF, and you will see that it provides exposure to the entire energy sector, including oil, gas, consumables, fuels, energy equipment, and services. So if you want comprehensive exposure to energy companies, then this is the ETF for you. Looking at the holdings, as I mentioned, it is a market cap weighted ETF. So the giants in the space, Chevron, Exxon, they have a lot of exposure, almost 44% to these two companies. And then you have ConocoPhillips and other oil companies. Now, the third one I wanted to talk about is again by State Street, and it is the most popular exploration and production ETF, ticker symbol XOP. So it is equal weighted, not market cap weighted. And this is also very popular, 2.1 billion in assets. It has an expense ratio of 35 basis points. Again, you can go to the code page on Zacks.com. And from there, the external home page, and you will see that it holds companies and integrated oil and gas, E&P, exploration and production, and refining and marketing. And looking at the holdings, you will see Occidental Petroleum, Devon Energy, Diamondback. You will also see Exxon and Chevron in the holdings, but since this is equal weighted, so all those companies get almost equal weight, and it is not top heavy. Now, on the next slide, I have the comparative performance year to date versus the S&P 500 index, and you will see that all these ETFs have significantly underperformed the S&P 500 ETF despite the recent rebound. So USO is down more than 70%, and the other two are down between 30 and 36%, whereas the S&P 500 index is up about 14% year to date. On the next slide, I wanted to show the recent rebound over the past month. So you will see that the exploration and production ETF is up about 25%. XLE is up about 20%, and USO is up about 12%, whereas the S&P 500 index is up about 4% over the past month. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. And also make sure to subscribe to our videos so that you do not miss any episode. And I'll see you next week.